5 minutes left for markets to close. Jai Bala from cashthekiosk.com is with us on the show. Jai, we've had 2 nice days on the trot and today we've moved sideways. What are the technicals telling you about the near term?
Hi, Rima. Good to be here. See, the market's counter trend bounce that started from 23,265, that seems incomplete. And the emphasis is on the word counter trend bounce. So from a very short-term perspective, I anticipate the market to drop to somewhere close to 23,800 and then rise up to somewhere close to 24,400, maybe even 24,800. But that kind of bounce will probably lull the marketplace into a complacency, thinking that buy the dip is back. But what lays ahead from a slightly higher time frame, what I said on October 1st, that still remains in play. The focus is on the June 4th, 2024 low. That's where this market is heading. The next leg is likely to be equally sharp or even more sharper than what we saw from the end of September. So the objective for market to decline to 21,280 remains the focus for the market.
Okay, all right. So you're retaining that call, Jai, that we are heading to the general election, counting day, intraday low. Okay, that's a big one. And what makes you sure of that call? I mean, are you seeing something coordinated across global markets, maybe with the US 10-year, gold, etc.? Or do you see this as a bit of a more isolated move here in India?
Yeah, fair question. This would be, Reliance, the 10% of the market, is saying that recent low it registered about 1220 and change. That's not the final low. So that's been the marker for me for some time. I've been saying that since August 20th, that Reliance underperforming is not good for the market. And if you look at HDFC Bank, today's high was a fresh 52-week high, and the market is not able to hold that. That's not a positive sign. Not yet a bearish sign yet, but if this were to finish negative today, that will be again not a positive sign for the market. From a global picture, the dollar index is doing something very unique. It went to a 52-week low and then came back to a 52-week high in 34 sessions, and that's very, very unique. That only other time that's happened is during non-normal time, which is during the pandemic. Other than that, in the last 30-year history, this has never happened. So that's telling you something very, very unique. And if you look at the US 10-year yields, it's likely to pull back somewhere close to 390, 380 bips, and then exceed the October 2020 to 2023 high of about 500 bips and change. And that's on a path to 800 bips in the long term, which I've been saying since 2021. So there's no change in that. And the US equity markets, it's likely to complete finishing sequence. It needs to tops. The topping formation isn't there. But NVIDIA is starting to crack. If NVIDIA starts to trade below 132, the biggest macro for the world, that will confirm the global equity markets are also turning, and that will put additional pressure for the Indian equity markets.
By the way, the mid-cap index was up nearly 0.5% just about 30 minutes back, and now it's completely flattened out. Pull up the mid-cap index there. You've had that fall starting 3 p.m. The small-cap index, though, continues to maintain its gain, so that's still up close to about 0.9%.
A letter of award coming in for RVNL, 625 crores from the South Central Railway. That's the sort of award coming in for RVNL. Stock, of course, did very well. All railway and PSU names did very well yesterday. Jai, any specific trades, stock-specific names?
Yeah, I have two for today, Prashant. One short and one long. The short is on Ashok Leyland. The drop from 264 it registered in September. It dropped from there. It dropped 202 in a trending fashion, and the bounce from there on to today's high is looking like a counter trend bounce. Hence, the stop loss at about 242 with a price objective of about 197, and a conditional long on Voltas. Voltas, the recent high it saw in September, it looks like an unfinished price structure. So, but the reason why I'm making a conditional is because of the overall market conditions. If Voltas were to cross 1715 on an intraday basis, that will mark the beginning of a rise to fresh 52-week highs. But if 1622 were to break before 1715, this is a cancelled trade, and you want to wait for 1715 to get taken out, and then consider the price objective of 1975, maintaining 1622 as a stop.
Okay, all right. So those are individual trades as well. Jai, by the way, and we can talk about this more in our next chat. When you talk about the dollar index, should we look at and some other dollar proxy? Because dollar index is what, 50-60% euro, right? So that kind of reflects maybe euro weakness more than I mean, so maybe something else. I don't know. And that especially now because the growth differential is so stark and is widening.
That's right. Fair, very, very fair, Prashant. Euro makes it about 57% of the dollar index basket. And the next comes to is JPY and the GBP. So I have a long-term call on the Euro USD cross. I'm expecting the Euro USD cross to drop to somewhere close to 0.8, and that's been my call since November 2022. And but the other equation that's probably playing out is the USD CNH cross, and that's probably an anticipation of tariffs. Maybe they'll make the Chinese market competent by depreciating the USD CNH. What does it mean to the Indian markets? The USD INR is behaving like a peg currency. So, it's more tracking more the USD CNH rather than the dollar index basket. And, if the rupee remains strong, the cushion that the markets get by the depreciating rupee, the assets still remain overvalued. But had the rupees been depreciating, the fall for the Indian markets would have been shallower. But since the rupee is strong, the depreciation has to happen proportionately for the Indian markets.
Absolutely, and the point is well taken. It's like a not a proxy, but yeah, I mean the dollar against the Chinese currency and dollar against the rupee. I mean tracking very, very closely, and for good reason as well. Thank you very much, Jai. Actually, stay with us. We're going to come back to you in just a bit for more.